Good evening. Let's talk business. I'm Sneha Koshi. Markets continued their gaining streak for the fourth day to hit fresh record highs. PSU banks and media sectors declined the most, while IT and energy sectors were the gainers. Hiral Dadia with the wrap of all the market action.
An interesting day of trade for the markets where we see Nifty as well as Sensex hit record highs in trade yet again. In fact, Nifty managed to cross the 19,819 mark, whereas the Sensex crossed the 67,000 milestone in intraday trading session. In fact, Bank Nifty was also trading at life high levels, and there was a lot of support that was coming in from the banking majors as well as the IT names. In fact, the last 2 to 3 sessions have been absolutely strong with regards to where IT names go. There was outperformance in intraday trading session from Bank Nifty vis-a-vis the benchmark indices in trade. But if you see towards the lag end, the outperformance actually went into underperformance, wherein Bank Nifty ended negatively, whereas you did see Nifty ended with marginal positive gains. Clearly, in the second half of the trading session, we've seen markets actually give up those gains. And that's the trend that we have been witnessing. Sell on rise and buy on dips, because there is the profit booking that is coming in at higher levels. Overall, advanced decline ratio was pretty much in favor of the bulls earlier, which then has turned in favor of the bears. RIL hit a 52-week high as well. Top gainers were Infosys, ICICI Bank, Bajaj Auto, NTPC. These were few of the names that were seeing smart moves in today's session. Whereas on the losing end, you had names like LTI Minetree, which was reacting to numbers, Britannia, HDFC Life, as well as Bajaj Finance. Let's quickly look at stocks that contributed to the gains today on the Sensex. Names like ICICI Bank, Infosys, HDFC Bank, as well as Reliance. Whereas on Nifty side, you had Infosys, RIL, Asian Paints, as well as a TCS, which contributed to the gains. Looking at the newsmakers of the day today, Kela Foam jumped in trade on the back of the 2 acquisitions that they've made. Rallis jumped in trade as well after Tata Chemicals increased stake. Tata Elxsi saw pressure today as the profits dipped for the company. Amara Raja Battery saw a block deal on the back of which we did see a 6% move on the counter. Ganesh Housing saw a smart move on the back of earnings. Godrej Agrobat was another one that see a strong move, and this is on the back of the land that has been allotted to them in Telangana for oil palm processing. So a lot of newsmakers that were in trade today, but clearly it has been an interesting day of trade for the markets. There has been profit booking, and the next level that everyone in the market is eyeing as to how many days it will take for Nifty to hit the milestone number of 20,000 from here on, and which are the stocks that will contribute and which are the stocks that will come in, as a roadblock for Nifty to achieve those 20,000 levels. So an interesting days, interesting times in terms of where markets are concerned. Back to you.
And in the 30th annual general meet of Adani Enterprises, Group Chairman Gautam Adani said the Hindenburg Report was a deliberate, malicious attempt at damaging Adani Group's reputation. He talked about the group's financials and company's green energy push. Let's listen in.
The report was a combination of a targeted misinformation and discredited allegations, the majority of them dating from 2004 to 2015. They were all settled by appropriate authorities at that time. This report was a deliberate and a malicious attempt aimed at damaging our reputations and generating profits through a short-term drive down on our stock prices. Subsequently, despite a fully subscribed FPO, we decided to withdraw and return the money to our investors to protect their interest. While we promptly issue a comprehensive rebuttal, various vested interests try to exploit the claims made by the short seller. These entities encouraged and promoted a false narratives across various news and social media platforms. Consequently, the Honorable Supreme Court of India constituted an expert committee to look into this matter. The committee included individuals known for their independence and integrity. The report of the expert committee was made public in May 2023. The expert committee did not find any regulatory failure. The committee's report not only observed that the mitigating measures undertaken by your company helped rebuild confidence, but also cited that there were credible charges of targeted destabilization of the Indian markets. It also confirmed the quality of our group's disclosures and found no instance of any breach. While SEBI is still to submit its report, we remain confident of our governance and disclosure standards. It is my commitment that we will continue to strive to keep improving this every single day. Our FY 22-23 operational and financial results are as much a testimony to our success as testimony to the continued expansion of our customer base, be it on the B2B side or the B2C side. Our balance sheet, our assets, our operating cash flows continue to get stronger and are now healthier than ever before. The pace at which we have made the acquisitions and turned them around is unmatched across the national landscape and has fueled a significant part of our expansion. Our national and international partnerships are a proof of our governance standards. The scale of our international expansion is validated by our success in Australia, Israel, Bangladesh, and Sri Lanka. Some of our key achievements are as follows. The Adani Group of companies set a new financial performance records for FY 22-23. Total EBITDA grew by 36% to rupees 57,219 crores. Total income grew by 85% to rupees 262,499 crores, and total PAT grew by 82% to rupees 23,509 crore. The group's accelerating cash flow further improved our net debt to run rate EBITDA ratio from 3.2x to 2.8x. Speaking of green power, the Adani Group is set to play a critical role in India's net zero journey. Our renewable energy business, Adani Green Energy, commissioned the world's largest hybrid solar wind project of 2.14 gigawatt in Rajasthan. Our operational renewable energy portfolio has grown by 49% to over 8 gigawatt. This is the largest operational renewable portfolio in India. Our focus remains on producing the lowest cost green electron at a scale, and I would like to reaffirm our target of a 45 gigawatt of renewable energy capacity by 2030. And there is more. We are now building the largest hybrid renewables park in the world, right in the middle of the desert in Khavda. It will be the most complex and ambitious project that we have ever executed. Spread over more than 72,000 acres, this project will be capable of generating 20 gigawatt of green energy. And we intend to build it faster than any project in our execution history.
And Piper Serica's Abhay Agarwal shares his outlook on profitable pockets in the market and taking equity risks in the small cap and mid cap spaces. He adds that the India opportunity has brought forward many options of good counters in the public and private markets. Let's listen in.
In the private space, we see, despite all the talk about the froth, I think there are pockets, there are founders who are very sensibly building their businesses and looking at raising money at the right time, at an appropriate valuation, which still leaves enough money on the table for investors. So I think Tamasek's perspective is absolutely right. I mean, they have been incredible investors in India for more than 20, 25 years. So they have a very good perspective. And in a very small way, we are replicating that by saying that, look, we are equity investors, we take equity risks, and the equity risks can't be limited only to the large caps. And if you want to make long-term money, 5-year, 10-year perspective in India, then I think the zone that you want to be in are the mid caps, small caps in the listed space and in early stage private companies.
At BQ Prime's India Opportunity Summit, Sanjeev Sharma and Madhusudan Kela explained what will drive India's multi-decadal capex cycle. Listen in.
I think there are plethora of ways by which you can play this. My favorite theme is obviously the infrastructure side of capex, and also this China plus one. Given that this PLI, in my opinion, when we talk maybe 10-15 years down the line, would have been the biggest game changer for India. Because what people are not realizing, by giving maybe 3 lakh crore rupees of PLI incentive spread over 14-15 sectors, the government will generate 60 lakh crore rupees of revenue in this time frame, right? If you calculate GST on that 60 lakh crore, whatever number which you want to assume, it will be multiple of what they're actually being able to give. Forget the income tax, forget the benefit which you will get by job creation and all. And this will enable that a lot of industries which were kind of uncompetitive in India, let's say mobile manufacturing. Yeah. In the earlier panel it was being spoken. Now the EBITDA margin typically for a mobile manufacturer in China is 3%. Right? Here if you are giving 5% incentive on the top line, of course I will be competitive. Right? So the PLI change itself is going to be a big thing to watch for. So manufacturing, which is specifically China plus one, and infrastructure-led capex.
The components which are playing out, they are multi-decadal cycle. So it's not a 5-year cycle, 7-year cycle. So you should look at this as a 10, 20, 30-year cycle. I think if you want a relative scale, you on the GDP comparison, you see we are 15 years behind China. But given the decision making that that was prevalent at that time in China, maybe you should give another discount of 5 years. So you say we're 20 years behind where they were. And I think if we continue to execute, continue to invest capital at scale, and at the same time bring new technology, adapt new technology, new productivity measures, and continue to have these larger themes like energy transition, manufacturing, going for scale in the area which really matters to the world as well as to your own energy as well as electronic security for the future. I think we play that and keep stable policy around it and incentive. I think it's a multi-decadal cycle in my view.
And LTI Minetree slides over 3% after the company reported lower than expected earnings for the June quarter. The recent entry into the Nifty 50 reported a consolidated net profit of over 1,000 crore rupees, making a 4% increase from the sequential quarter. Meanwhile, a sluggish demand environment has prompted LTI Mindtree's management to change its growth guidance. BQ Prime also spoke to the management. Let's listen in.
Well, actually, first and foremost, our pipeline is up 10% quarter on quarter, and that's a reflection of essentially the amount of, activity that we are seeing in the market. I've been on the road constantly for the last 3 months. I relocated to the US in May. And the clients, we are seeing actually similar interactions with clients both in Europe and the US. Clients are actually, if you look at their own performance, they've got strong balance sheets, they've, delivered good growth, strong, profits are healthy. So clients are in a healthy position. It's more about them essentially trying to understand how the macro pans out even for them and being cautious about spending whilst they're also dealing with the paradoxical macro, right, where we're seeing, high interest rates, but, very low unemployment. We're still seeing spend continuing in sectors, but pressure in other sectors like retail, for example, because of inflation. So I think we are, as we deal with paradoxical times, so are our clients. So the most of the conversations are to say, okay, in these times, what is the best return on investment? What are the spends that we can do in order to have the best return on investment?
Well, that's all we have for you in Let's Talk Business. Thank you for watching. On the other side of the break, we'll bring you all the latest news.